My name is Zach Fye, and in this video, as the title said, I tried out 6 different types of investing over the past 30 days, and I'm going to recap every single one. I did everything from just holding cash to buying derivatives, and right now I'm going to show you what that looks like. It's all tracked on this spreadsheet here, which I'll link in the description as well if you would like to make a copy for yourself to start tracking your own investments, or if you just want to see how mine are doing over time. Today, I'm also going to put $20 more into each of these sources, and then we'll track it for another 30 days, and we'll check in then. Sounds good? Let's take a look at these investments here. So, number 1, my least favorite thing in the whole world, US dollars, cash. And to no one's surprise, $20 of cash in my brokerage account is still exactly $20. Wow, that's totally crazy. So, unfortunately, we have to put another $20 into our cash deposit right now, which is just going to make me so happy. Hello, darkness, smile. So yeah, cool, right? Okay, great. Cash. Moving on. Bond ETF, the 7 to 10 year Treasury ETF. Not so bad. 4 cents, up 0.1%. 0.8, sorry, did I say 0.1? 0.18. 0.18%. And it paid a monthly dividend. I realized that iShares bond treasury ETFs, I think they all pay monthly dividends. They're very small because I only have $20 invested, so it's 1 cent, which I think is the minimum dividend you can make on a stock. But hey, we got it, so count it. That goes into our profit loss, so it's only up about 3 cents technically plus the dividend, but what are you gonna do? That's fine, we'll stick with that. I like it so far. As far as treasury bond goes, treasury bond ETFs go, I have no problems with it. It's slow. That's the point. Like I said, risk level, low. For cash, I should put risk level like infinity. The opportunity cost risk level of cash, don't even get me started, dude. Okay, so we're gonna put another 20 bucks in and we'll mark that in the spreadsheet and we'll keep going. Hey, look at that. 1 more cent of dividend pending. Love to see it. So, 20 bucks. Line that up. Review order. Dunk it in there. Boom. There you go. We've been filled. Now we're going to come over to our spreadsheet and put in these numbers so that we can get tracking. So we got filled for 114.75. So what I'm going to do is I'm going to click into our bond ETF at the bottom here. Put in our date, which is 6/4. I know it's a little past a month. I'm sorry. Put in how much we put in, 20 bucks. See, it tallies it up at the top. Still no dividends, 114.75, but obviously we're gonna fix the formatting so that it doesn't look terrible. Great. And then just drag this down. Oh, skirt. Drag this down, and it'll show you how many shares you got, and now how many shares you have to, oh, dang it. Come on. You are better than this type of formatting. Perfect. So now we have the 40 total investment there. And if we click back to the main screen here, it'll show you that as well. Psych, it won't. All right, technical difficulties are over. And here we go. So you can see now that it's completely updated. It is the new amount of shares there. It gives you the current price still, which is still the same thing. Price paid per share now averages the 2 that we've put together, the 2 $20 investments. Current value of our investment is $40.04. Strong. Amount sent 40. Everything else looks good. Okay, let's continue. Index fund ETF, VU, the boy. $20 more. Twist my arm. Back at Robinhood here. Just gonna find VU, which should just know to pop up. But it's okay, it's cool. It's fine, we get it. Take VU. Take VU. $20 in. Perfect. Just copy and paste this number. Boom, boom. Back to our spreadsheet. VU has grown 1.26%. That's great. If it did that every month for the next 11 months, then I would have over 12% in return, which is over 8% yearly. Just saying, that's pretty good. Okay, so VU looks good. Got to put in our new investment here. Go to this spreadsheet. Yes, looks good. you see that your profit loss essentially halves when you buy at whatever you were at there. That's just how averages work. With compound interest, it's more important to get constant investments going than it is to see higher percentages. So in your best investments, your percentage increase is not going to just forever be this huge number. It's going to be going down a little bit whenever you reinvest because you're buying at that number. So you're essentially having whatever percent gain you've gotten up to that point if you invest the same amount of money. Okay, now on to ARK, which turns out to be maybe medium high risk wise. I don't know. And maybe VU is even medium or low, but that's, TBD. It's still an ETF of stocks that, whatever. But ARK, wow, yeah, definitely could be medium high. Might need to upgrade that at some point because, man, did it take a beating recently. ARK holds a ton of Tesla and Zoom and high growth tech stocks. It's a very high growth, innovation focused ETF. So yeah, of course, in the last couple of months where those stocks have been taking a beating, it's going to be taking a beating as well. So still feel okay about it. Cathie Woods still seems like a pretty smart person, and I'm just going to go full force $20 more into it, and we'll see what happens over time. Hopefully that 10% loss turns into not a 10% loss. See, now our profit loss is half the other way. So now instead of having lost 10%, we've only lost 5%. Pretty neat how that works too, huh? All right, this next bit, I'm just going to fast forward through this after I go through the percent gains here because it's going to take me a bit to buy $5 in each of these stocks. But overall, not so bad. Apple, definitely, we happened to buy it at a very high point when it hit 134.35. So it hasn't even come into the 130s, I think, since that time. So definitely we bought that at probably the wrong time. Again, timing in the market, very hard. Microsoft, only down 3%. That's just the way. That's not crazy. Microsoft, I think, is still just kind of a rock. So appreciate them. Gonna half those loss percentages right now, so that'll be nice. American Express. I sneakily bought this right after, I think, an earnings report. I saw that it went down 10% or something overnight just because of something that happened. I don't know if it was an earnings report, but something came out that everyone was like, whoa, American Express is gonna go bankrupt or something like that. So bought it, and hey, didn't go bankrupt, and it actually went up 13%. So that's our biggest winner so far, if you don't count the derivative that maybe you've seen already below. But it's meme stock mania right now in this first week of June here. So Sundial, I think, is one of those peripheral meme stocks and happens to be working in my favor. So not mad, but it's the highest percentage growth for a stock of any of the ones that we picked, since a derivative is technically not a stock. It's the highest growth, is the biggest winner so far, American Express. Shout out. Last thing, Johnson & Johnson. Yeah, I think that one was bought also pretty close after the vaccine was canceled. What's that called? It was paused. They stopped allowing it to be used, or they stopped using it basically. So bought in right around that time. It's gone up 0.66%. Still great. If that continued at 0.66% monthly, that would be a great return over a year. If I had to do the math out, it would be about 6%, maybe a little bit more than 6%, because there's 2 extra months. So 6 times 10 is 6. 60. It's like 7%. Not bad. Not bad. Maybe it'll continue that. Maybe it'll do even more. Who knows? So here we go. Okay, we're back. So you can see here that all those percentages just became much smaller. So you can see that I'm down now 3% in Apple, 1.79% in Microsoft, and up 6% in American Express, and 0.25% in Johnson & Johnson. Sweet. So far, the winner has been the stocks, picking the stocks. Of all the stocks that I've bought, and including the cash, just picking 4 simple, solid stocks that I liked has been the best investment. Funny enough, who knew? Warren Buffett, I'm coming for you. Just kidding. Now, let's get into that derivative. Right now, my Sundial $2.50 call in January 21st of 2022, expecting the stock to rise hopefully to $2.50 by that time, is worth $42. Well, 42 cents times 100, so $42. We'll just plug that in there. And you can see that it's up 110%. That's funny, because that's a lot of percent. But also, that's the thing. The sundial call has been the thing that has gone the lowest. Like I said, I'm not a financial advisor. I haven't said that yet, but I'm not. And all of this is just for entertainment. So I hope it's working. Let's take a look at this options chain here, see what we can get ourselves into. Sundial's worth $1.19 right now. That's pretty spicy. Oh, that's a perfect idea. Okay, so that's what we're gonna do. We're gonna buy something that will likely expire the next time I do a video, check in on these investments. And it will, since it's an option, it'll decay over time. And if it's not close to $2, sundial, the underlying stock, then it'll probably be worth $1. And so that's my veritable prediction right now, is that this $20 contract is going to go to absolutely $0 by the next time. But if sundial continues its upward trend, which it may, fingers crossed, maybe it's worth more and maybe we'll have to get rid of it. But it's not going to be a long-term investment. It's just going to be something that we're putting $20 into in the moment to see what'll happen. And then maybe next time we'll buy another long-term one. So this is just for fun. Who needs $20 anyway? Hey, dropped $1. Nice. Okay, so bought that $20 call option. We got 2 call options going on sundial there. Again, they don't automatically update, so this is as of today. Well, that was market close yesterday. Great. So here's where we're at. Again, it's June 4th, and so far you can see that our stocks are winning the race here with a whopping return of 2.38%. In a close second is our boy Vu. And then everything else, well, I mean, the sundial call, but in 3 days that could be worth $20 again. So who knows? And that would mean my other one is going to be worth even less. So we doubled down on sundial going up, and I hope that it is growing, pun intended. So clearly our spreadsheet here, it's looking pretty good. If you want, again, like I said, it's going to be linked down in the description if you want to try it out for yourself, or if you just want to follow along. Trying to make this as demystified as possible to show you that it's really, really easy to do all of this and maintain all of the tracking for it and everything. And it's even colorful, which is the best, right? Yeah, it's simple. I want everyone to try investing just because it really is a great way to spend your savings and have that savings grow. I know it seems silly, but that's really why I'm here. I want to make sure that everyone feels comfortable with it, and I want to make a joke out of it because it's also not this serious business that everyone on Wall Street thinks it is. It's really just numbers on a screen going random directions for reasons we can't fully explain. Okay, well, either way, thanks so much for watching. If you want to start a brokerage account, you can start a Robinhood. That's where I was just buying and selling all of the things that you just saw. There's a link in the description. If you start the account, you'll get a free stock with no minimum deposit, so that's pretty sweet. And you'll also support this channel, which I would really appreciate. Also, if you want to toss this video a like and subscribe if you haven't already, that would be super. And I'll see you in a month. Well, at least for this video. My next video will be out on Friday, so if you want to watch that, it'll be there. Okay, bye.